Okay, everybody, it's me, Gregory Mannarino. It is Sunday, August 7, 2022. This is my newest segment of Markets A Look Ahead. Bear with me here. I have a bunch of things I want to cover with you. And I'm going to ask you ahead of time. Please share this video. There's going to be a lot of important information here. Let's start off with the freak show market, okay? Because everyone's looking at it. Everyone wants to know what's going on here. And we're going to put that into perspective right here and right now. What have you and I been seeing with our own eyeballs, with our own eyes? What have we been seeing? I would say this, some very desperate action with regard to the debt market. What's going on here? What do we realize, or what do we know for a fact is going on here? Well, there is some kind of, and I mean off the Richter scale, yield curve control going on here by central banks. European Central Bank, more specifically, Federal Reserve. What do I always tell you every freaking day? Watch that 10-year yield. What have we seen? Just over the last month, we've seen fluctuations with regard to the 10-year yield, which is the benchmark. Again, the reason why I and you need to focus on the 10-year yield more specifically, because that's the one that matters to the market. That's the benchmark. That's where everything is priced off of. You understand? Okay. So with that said, we have seen unprecedented action here in the 10-year yield. We had a major sell-off in the 10-year yield, which immediately the same day we watched the sell-off, 10-year yield spiked to over 3.5%. European Central Bank jumped in here with an unlimited bond buying program for which they're expanding on. How do you do that? I'm still waiting for a clear answer. And the Federal Reserve is doing it too. Now listen, the Federal Reserve does not have to announce what it's doing. First of all, they can do whatever they want at any moment. All you need to do is watch it. Watch the flow of money. And how can you see that? When you watch the 10-year yield go from a 3.5, let's just make it a nice round number here, to a 2.5 in a matter of a few weeks, who's buying all the debt? Again, it can't just miraculously happen. Some entity with an unlimited amount of firepower at a cost, higher inflation, must be getting into the market and buying all the debt. When you buy the debt, the 10-year yield drops. Now, what have we witnessed as of late? We had a 10-year yield 2.5 shot all the way up to 2.83 in just a couple of days, a monumental move. Now, on Friday, we came back down to 2.67. So what we're seeing here is very clear in my view, and I would believe you would agree. This is instability in the debt market, but the Fed's not going to allow it, okay? They're not done inflating. What is the goal of central banks, people? You know this better than anyone on the planet Earth if you follow this blog. The goal of central banks is to inflate. They inflate and they acquire assets with the product, their product that they just make. They create it out of nothing and they can do whatever they want with it. That's what's going on here. Just follow the money. A lot of people write to me and say, hey, Greg, I can't find an announcement that says the Federal Reserve is buying the debt. What do you need an announcement for? Use your own intellect and listen to your own eyeballs. All right? Look at what's going on here. Duh. I mean, sincerely, people, that is what's happening here. So with this mechanism in place, when you have central banks who do have an unlimited amount of firepower buying it all, what's the game? How does it work with regard to equities and the stock market? Well, you're seeing it again with your own eyes. Higher. When central banks artificially suppress rates, bond yields, okay, it creates an environment of risk for those of you that are new here, and that pushes cash into equities or into risk assets. It has no business being here. Okay, what do we know is going on as well? We have a global economy in free fall. We have warnings from everybody here. The International Monetary Fund, the World Bank, central bankers, believe it or not, are even warning about it. But no one's listening, okay? It's just the mechanism here. We got another warning from the IMF, as a matter of fact. I'll talk about that in just a little bit. But so this environment here of distortions in the debt market, which are unbelievable here, is creating an artificial environment Cash is moving into things it has no business going into and coming out of places where it should be going into. Okay. It's a crazy kind of a situation here, but what would you expect when you have the largest aspect of the market, and that is the debt market by exponents? It makes the stock market look like a fleck of dog shit stuck to your computer screen. Okay, debt market is massive. When you have the largest aspect of the market being rigged to the highest possible order by central banks, well, how is anything real? There's no price discovery. How many times have I told you that there's not a single asset today, not one, that has a real price discovery mechanism behind it? You've heard me say this a million times if you've been with me long enough, all right? And it creates an artificial environment and distortions across the spectrum of financial assets, the entire markets themselves, which will eventually correct to a fair value. And that implosion is going to start in the debt market. And central banks, like I said, are desperate right now to continue to suppress rates, creating an environment of risk, pushing cash into the stock market. So what am I telling you here? In Greg Mannarino's view, and I've been doing this for a while now, before the run-up in the market, I told you I was back in here big time. I'm buying big time, okay? And that investment, one specifically, ticker JEPI, I'm not telling you to buy it. I'm telling you what I'm buying, okay? Has been paying off. It has a massive hedge in the form of a large dividend, which it pays monthly, okay? A monthly income stream. You need cash flow. Cash coming in to your accounts here, okay? So you need cash flow, and this particular investment gives you cash flow, and I happen to like cash flow. All right, so with that said here, what else am I telling you marching forward here? 10-year yield 2.67, that was Friday. Keep your eye on this. We had a pretty high run up to 2.83. We've come down substantially here, and I don't think we've seen the bottom at all. I sincerely believe, and I've been telling you this for a while now, that there is a very high probability that the 10-year yield is going to drop below 2.5. What is that going to do? 2.5%. That's going to push even more cash into the stock market as central banks continue to inflate. You know what's missing from all of the talk as of late here, people? I want to tell you what's missing here. Let's talk about our illustrious president. I'm going to say something nice. I'm going to call him our illustrious president, because he's, look, we got to be nice to those that are, whatever this guy is, okay, right? When he took office, the national debt was around $24 trillion. We're at $30 trillion right now. How many of you recall his big promise? Oh, when I become president, we're going to pay down that debt. Let's see, we've increased, what does that come to? Just as off the top of my head, don't hold me to this number. That's about 18, 20%, something like that, increase in the national debt. What have I always told you? Since time immemorial, every president must outspend the previous president by exponents just to keep the system afloat. The debt-based economic model, which is what we have, demands that debt be borrowed into existence in greater and greater amounts. And I'll tell you something else that's missing from the equation here. So what do we know? COVID spending thus far, 4.5 trillion. Now hold that thought here. It took us roughly, okay, these are rough numbers here, 250 years to build up the current national deficit or debt. And this is just at face value, not counting derivatives or anything connected to it. Okay, let's use that number, 30 trillion. It took about 250 years to get 30 trillion. Well, what's not being told to anyone, let's just throw some numbers out here. Okay, just rough numbers here. Since over the last 2 years here, 4.5 trillion for COVID, for which Congress is looking for what? Another 21 billion more for COVID, and another 7 billion, billion for monkeypox. Now they're talking about more funding for polio. And these are rough numbers here. Roughly 40 billion in weaponry that we've already sent to Ukraine. Now Congress is looking for more, more weapons. So just add these numbers up, and they're pretty freaking stunning. And these numbers must get larger. They must get larger. Again, And no one's talking about how President Bidenstein, like Frankenstein, it's mummy man. Frankenstein, mummy man. That's what he is, okay? And he's using the illusion that he's demented for plausible deniability. You have to understand that. I think the man knows what's going on. I think he's actually just playing a game here. I don't really think he's demented. He's just playing that up for plausible deniability here. So he can say, oh, did I really tell you that I was going to pay down the Democrats? We're going to pay down. It doesn't matter. Democrat, Republican, doesn't matter. Trump did the same thing, inflated the debt just like Obama before him. Okay, they can't tell you that that's what they must do. They have to lie to you and tell you other things here, okay? You know that game. It's just a game they play. So what's being left out of the equation here, especially on surging inflation, is the fact that we've watched our national debt by their own numbers increase like 20% since COVID. Doesn't anyone, again, it took 250 years to build up the $30 trillion here. And it took 2 years to add another 20% to it? Oh, imagine my shock. No, it must continue to expand. It can't stop. But you're not being allowed to know these things. You're also not allowed to know that all of the spending, the increasing in the debt, is massively inflationary. Think about it, people. It's economics 101 here. You keep creating cash out of thin air and buying assets. It's inflationary. But you're not supposed to know this. You're going to hear from President Imbecile and all the other loving, caring members of Congress, oh, we really care about this, and we're going to hold the Fed to account. Speaking of that, let's just going back to some of the stuff I was writing down here. So the International Monetary Fund, what have they been warning? What have you and I been hearing over and over again? Inflation is going to become entrenched. Inflation is going to continue higher. Well, here's another warning that just came out here. This is on Friday. The effect of high inflation is not going away anytime soon. Duh! Really? Oh, imagine Greg Mannarino's shock here. Oh, I forgot to add, I wrote this down too, the $2.2 trillion for the Build Back Better program. You can't make this stuff up. It's impossible to do. But why is not a single mainstream media outlet, propaganda ministry talking about this? Because they can't allow you to know it. Because you would say, hold on a minute, wow. You mean to tell me that we've increased the national debt 20% in just the last couple of years here? Oh, but you see that you can't know that because if you realize that, they would say, wow, that must be inflationary, right? But you have to be lied to. You also can't know that central banks are buying everything. That's also massively inflationary. But what you are allowed to know is central banks are raising the overnight lending rate. And anyone that's trying to tell you, from what I understand, there are a couple of YouTubers out here, okay, who are trying to sell you the propaganda ministry lie. What is that? That if the Fed raises the federal funds rate or the overnight rate, oh, that's going to tame inflation. You can't make that stuff up. You can't do it, but that's what they're selling you. Look, anybody with a functioning brain, one functioning brain cell would realize, let's just talk about the Fed, that if the Fed is raising or nudging the federal funds rate higher, this is the overnight lending rate. If they're doing this incrementally, okay, it's going to tame inflation. Meanwhile, we got all this other stuff going on. It ain't happening, okay? Anyone trying to tell you something different doesn't understand at all what's going on. But you do if you follow this blog. Everything I say to you here should, especially here in this blog, this particular one, should make perfect sense to you. At least I hope so, at least. Enormous spending beyond your wildest dreams, is that not inflationary? It is inflationary. You're not allowed to know that. How is it that what we've already seen, they're going to expand on exponentially because that's what the debt-based economic model has to have in order to keep it functioning? Well, that's inflationary too. Central banks buying it all. Yield curve control. The Fed here is the one buying the debt, suppressing rates. Also massively inflationary. Duh. You can't make this stuff up. Like I said, it's impossible to do. Let me ask you, what I covered here, does this make sense to you? Or do I sound like I'm from another planet, that I'm just making this stuff up out of my head here? I want to hear from you as always. Please comment. Also, understanding, again, this is Markets a Look Ahead, the current environment of ballooning debt. It's not going to stop anytime soon, okay? We have not hit the moment of maximum saturation. In other words, a moment in time where inflating the debt and creating inflation becomes so great that it overpowers the ability for that inflating debt to prop up the stock market. That's the moment of maximum saturation. We're not there yet, okay? Central banks, they're pretty crafty here, along with their puppet governments, okay? That's all these people are. They are puppets. You all know that. Current president included. Anyway, look, this video is getting kind of stupidly long. I think I covered a lot of very important material with you, but I want to hear from you. Do you think this is important? Do people need to know this? If you believe that, please hit that little thumbs up down here. Please share this video. Get it out here as far and wide as you possibly can, because you're not going to hear this from probably anybody else. It should make sense to you people. My job is to take what's going on and breaking it down to basically its most simple, the most simple way I can, so it's easy to understand. And I think I do a good job at that. If you agree, I would love that thumbs up. I'd love you to share this video, and I want to hear from you. Please comment. I'll see all of you in the morning, the beginning of another freak show in the market. But we got it covered. We know what we're doing, and we know why we're doing it, okay? Betting against the debt, becoming your own central bank, realizing the situation that we are in is going to get much, much worse. The debt is going to swell much, much larger globally. What do you want to do? You want to be in a central bank issued note? Really? Is that what you want to do? Or do you want to be getting outside the system? You want to create some cash flow for yourself, like I covered earlier. You want to be holding hard assets here. Here's my favorite of all time. All time, okay, right here. Physical silver, in my view, it remains the most undervalued asset on the planet, period, the end. Do your own research into this as always, and I believe if you do, you'll come up with the same conclusion. I mean, just look at, you want a little homework assignment? I always give the same one to you. Here it is. Look at the Dow gold ratio, gold silver ratio, and you'll just that alone. Just look it up. Let your fingers do the walking, okay? And you'll see why I tell you that silver is the most undervalued asset on the planet. Love you a lot. Again, please comment. See you in the morning.